Hi, everybody. This is Andrew Perlin, and I want to welcome you to another edition of Insurance Explained. Today, I want to talk about something that just recently happened. So, I was giving a small talk about life insurance, excuse me, and at the end of the meeting, a woman came up to me and asked me if I could review her policies. We scheduled an appointment. She showed up to my office a few days later, and with her, she brings three policies, and they were all term policies. And she's kind of freaking out a little bit. She's like, "Hey, listen, I haven't looked at this thing in years. I just paid the premium. I know they're enforced, but I don't know what they do. I don't know what's going on. Can you help me out and just tell me what I've got?" Sure, no problem. So again, there were three policies. It was one policy on her and two policies on her husband, and they were all term. So real quick, for those of you who don't know, here's what term insurance basically is. Term insurance is a product that is designed to cover income for a particular period of time. So the way it works is you buy a policy or a face amount. Let's say in this case it's $200,000. You buy that, that will stay level for the life of the term. And you buy it for a certain period of time. 5 years, 10 years, 20 years. You can go all the way up to 40 years depending upon your age and your health. So you buy the face amount, that'll be locked in for the life of the term. The premium that you pay in day one will be locked in for the life of the term. And then once the term expires, one of two things tends to happen. Either the policy will expire and just cancel and you're done, or it will recalculate your new age and then give you a new premium. And then every year it'll just keep on calculating it until either you pass away or until you're like, I can't do this anymore. So by its very nature, you're buying this term policy for a particular period of time for a particular reason to cover against a loan. You may have small kids in the house, a mortgage, that kind of thing, and you want to get yourself through that time period because if you don't, you need your insurance to help pay the bills. So again, if you're thinking of term insurance as a way, I live to life expectancy or beyond, my term policy is going to get me there. It can, it's just going to be super duper expensive. And her policies were set up in two different ways. One was a 20-year level term, and that term was going to expire later this year. So she was paying somewhere around $1,000 or so a year for this term policy. In June or July, when it renews, it's going to be upwards of $9,000. Why? Because she's 20 years older than when she bought it, and it's going to recalculate based on her current age and then go from there. And then every year after that, it's going to increase. So she's just like, I don't want to pay $9,000 for this term policy. And I couldn't agree with her more. The other policy that she had on her and her husband was what we call increasing premium term. So she bought that about 10 years ago, and every year the premium just goes up. They recalculate her age every year. With that comes a new price tag based on the face amount, and it just goes up. And it's going to keep on going up until her and her husband hit age 80. And where she's looking at the schedule of payments, she's like, there's no way I'm going to be able to deal with this down the road. Completely understand. So now she's kind of freaking out. She's like, I don't know what to do. How do I handle this? I'm going to lose this insurance. I still have a need for insurance. And what's the next step? So I gave her options, and her options were basically this. One, do nothing, leave it alone, right? The policy will increase in June or July. You're not going to pay for that anymore. Let it go and be done with it. Your annual renewable term is just going to keep on going up until you can't deal with it anymore. And if you're okay with that, then I'm okay with that. And then let it go. She did not like that option at all. So that brought us to option two. And option two is considering that she's healthy, and according to her, she said she and her husband are. Okay, great. What we can do is we can kind of consolidate this thing, maybe get one policy, put it out for another 10 or 15 years, keep the premium level, get the face amount level, and it gives her time to figure out what her next step is. She liked that option because she felt like she still needed insurance. Well, that's what we're going to do. So she has to go through underwriting and she has to do all the things that you need to do when you go buy a life insurance policy. She feels that she and her husband can qualify. Great. Makes all the sense in the world. Now, the point of this conversation, though, isn't necessarily about telling you you got to buy term insurance or you got to buy a permanent policy. That's not what this is about. This is about the whole concept of not reviewing your insurance. Okay, we've talked about this in videos prior. Like, you can't just set it and forget it. You just can't. 20 years ago, it made a lot of sense to her, so she bought it. I'm not saying that her advisor was wrong. I'm not saying her decisions was wrong back then. But what happened was that her life changed. And now she has to make changes to her policy. Now, luckily, she's healthy and she can actually get these policies. But that doesn't always happen. Sometimes people don't look at this stuff. Policies expire, health changes, and the next thing you know, you can't do what you want to do. You can't plan the way you want to plan. So it's really, really important that you take a look at this stuff and make sure that it fits today as it fit when you bought it. It's just interesting to me because people look at their auto insurance all the time. Like they get that premium, freak out, like, why am I paying so much for my auto insurance? And they'll call their advisor and they want an explanation or at least a review. You talk to your CPA every year to do your taxes, right? You see your doctor every year to get a health checkup. But for some reason, when it comes to life insurance, disability insurance, long-term care insurance, nobody wants to take time to look at it. And I mean, I get it because sometimes this stuff doesn't change, but sometimes it does. And more importantly, your life changes, right? I mean, my life is a completely different spot now than it was 20 years ago. So, do I need more insurance? Do I need less insurance? Is the insurance that I have going to expire? Do I need to make a change? You know, you got to really review this stuff. Now, the thing that I don't want people to take from this video is she made a mistake 20 years ago. That's not what happened. Okay, she did a good thing. She bought insurance. She bought what she needed or what she could afford. 7 out of 10 Americans are underinsured or have no life insurance at all. This is a win. And by the way, I'm not bashing term insurance. I'm just not. It's a very valuable tool. Term insurance can do a lot of good things. You can buy a lot of insurance for a really small price tag and have that last for a really long time. Most people buy term insurance really to cover a debt or cover a span of time. Usually it's their working years. They're building all those assets. And if they don't come home from work, what's going to happen, right? I got to replace my income. And then when you get to a certain age, you're like, you know what? I don't need it anymore. I'm retired, or my kids are out of the house, or that loan that I was trying to protect against, I paid it off. I just don't need it anymore. And then you get rid of it. Well, in those scenarios, term insurance worked out great. You got a big death benefit, you got a level premium, and you were able to get it for a really low price. Perfect. It's just not designed to be enforced on the day that you die beyond the life expectancy. That's just not what it's there for. So if you have something in the short term that you need to cover, I would say term insurance all the way. If you have something down the road, like long down the road, where you're looking at life expectancy, potentially term insurance is not the answer because it's going to get too expensive at some point. Like this woman is finding out that her premium is going to go from $1,000 to $9,000 in a month, right? So she needs to make a decision because no one's going to pay that. I don't blame her for not wanting to pay that. So again, she did a good thing by buying that policy. She's doing a really good thing now by reviewing that policy. Provided she's healthy, she has an option. That's a good thing. We'll fix it and we'll extend this out for as long as we possibly can. And term insurance is not a bad thing. You just have to know how to use it. The example I use all the time with clients is basically this. If you're trying to drive a nail into a piece of wood and you chose a screwdriver to do it, you can't be mad at the screwdriver when it doesn't work. Okay. You just picked the wrong tool. So insurance policies are tools. Term insurance is a tool. And if you use it right, it'll work. If you don't use it right, it won't. Okay. So that's why it's really important to understand what you're doing and have the stuff looked at as often as you possibly can to make sure it still fits. In this particular scenario, I do think it's going to be a win. I think she's going to be able to fix her problem and extend this out and get to a point where she feels more comfortable with the premium and with the policy. Again, it's not going to last her forever, but it will at least get her through so she can make better decisions. I come across these things all the time, and it's just important that we get it out there and people understand what's going on. My advice to everyone listening is check your insurance policies. If you don't have life insurance, disability insurance, or if you're at the age for long-term care, I suggest you look into it because it's a really important tool, can save you a lot of money and save you a lot of assets. And while you're looking at that, look at your home and auto too, because things change all the time. And like I said before, your policy won't until you change it. All right, guys. Hey, listen, thanks for being here. I do appreciate it. Please like and share the channel. It means a lot to me. We're getting some followers, we're getting some views, and hopefully you guys are getting something out of it. This is Andrew Perlin with Insurance Explained. Have a great day, everybody.